Your headlines. India's services industry maintaining a steady pace of growth in May with strong demand from overseas markets, but it also signalled price pressures are building. India takes its case to the World Trade Organization over US auto tariffs as the two sides meet for further trade talks today. And we will be speaking to the company building India's homegrown large language AI model. The co-founder of Sarvam AI will tell us about the progress they are making. Let's start with a check on the Asian markets in our region. And again, it's a story of something of a mixed narrative. You've got the Kospi post-election leading up by 1.6%. Hang Seng putting on about 1%. But Australia and the Nikkei in Japan looking a little bit listless. And let's call it flat for Australia. The Nikkei off by 0.2%. The Indian markets will be joining us in about 45 minutes' time. Here's what Gift Nifty futures are indicating for the open. We're looking at a number in the region of 24,733. So that would represent a lift of about 100 points or so. Let's give you the exchange rate. Dollar rupee trading at 85.8460. Now, trade talks between India and the United States are continuing, and US Commerce Secretary Howard Lutnick said there could be a deal soon. Speaking at the annual summit of the US-India Strategic Partnership Forum in Washington, Secretary Lutnick said a mutually beneficial agreement was close.
I think to be in a very, very good place, and you should expect a deal between the United States and India in the not-too-distant future, because I think we found a place that really works for both countries.
So you're pretty optimistic, it sounds like.
I would say very optimistic would be sort of the way.
In the meantime, India's services sector remained on a strong growth trajectory, coming in at 58.8 in May and a pip higher than April's 58.7. New businesses were a key driver of the continued expansion. Export orders also a bright spot, with May's reading seeing one of the sharpest increases in over a decade. Currency looking like this. Let's give you the rupee exchange rate once again against the US dollar, 85.8430. Remember, RBI is on deck later on this week. Let's bring in Gautam Chacharya, head of global markets in India at UBS. Gautam, great to have you on the programme. Your take, first of all, on the services sector PMI. Looked robust in May, didn't it? Export demand strong, record pace of hiring, though price pressures concerningly did intensify. What is that all telling you about the underlying fundamental picture for India?
So look, India is definitely less dependent on what happens to global growth versus other economies, but it is dependent, and there is a clear impact on local Indian economy. So this print in that sense is reassuring, but I'd also like to qualify it by saying that it's still early days of impact felt through what's happening around the tariff uncertainty on global growth, including U.S. growth. So it's still early days, but this print is definitely reassuring.
Gautam, I like your choice of words there. Early days in terms of the overall impact from trade and trade deals, and you can apply that expression to inflation expectations, I would imagine, as well, because, yes, they appear to be relatively well anchored. The story within the services sector PMI seems to be telling us otherwise. Where are you putting inflation and the outlook, which is really one of the drivers and one of the positive catalysts for the macro markets in India? And where then does it leave your expectations for the RBI?
Sure. So look, global inflation, it's a tough one to call, but from a local economy perspective, I think inflation has been on a downward trajectory. We are expecting further rate cuts. The debate is how quick and how deep RBI goes, because the inflation prints locally in India have created room for further rate cuts. And the outlook, even from the near term, the next couple of quarters on inflation, given the outlook on monsoons and agri-inflation, that should also be quite accommodating for the inflation trajectory going ahead. So we remain sanguine. We think there is room for more rate cuts, and there is room for positive surprise also there.
Gautam, how closely do you think, in aggregate, the RBI is watching this robust services sector print, which seems to be really flying in the face of the external challenges, especially when you look at the export demand side of the equation? And secondly, how closely do you think they are watching what happened on Friday with Q4 GDP surpassing expectations at 7.4%? Is that going to move the needle in any way or derail expectations of a further easing bias?
Unlikely, because it's still a very early part of growth recovery. India did see growth slow down last year and early part of this year, also impacted by the policy stance. Now, the growth prints now and looking ahead, it's too early for RBI to worry about that. Again, if you look at the GDP forecast out there, 6.4 is our forecast for fiscal year March 26. The street is somewhere around that. I don't think that's a print where RBI would worry about growth being too high, too early for that. In fact, if you look at other parameters like credit growth, that's still not picked up. We had a couple, 2-3 years of high double-digit credit growth, and that's when RBI really stepped in after that. So it's too early. I think there is enough room for RBI to surprise positively.
Understood. Is there a non-trivial risk, though, that the RBI this week could go for a superside rate cut and go for a 50-pointer?
It's not a tail kind of probability is the way I'll put it. It is definitely out of the table. Not our base case view, but it's a possibility.
And overall, how many rate cuts then, Gautam, do you feel at UBS are appropriate for the remainder of 2025?
So our economists expect 3 more rate cuts in this cycle, possibly this year or early next year combined. And that's, I think, where the street is broadly at. But looking at the inflation print and still early days of growth and the global uncertainty, I won't be surprised if there is more.
Understood. Gautam, let's just take a step back and look at the flows picture in that case. What are investor flows and positioning telling us about sentiment towards India amongst foreign and domestic investors?
So look, the local retail flows remain robust and almost like a systematic monthly inflows plan that supports a lot of robustness to the flows outlook for local investors in India. I think that thing remains sticky the way they are. And we have seen various periods of turbulence, 3 big periods of market drawdowns over the last decade or so. And even the last few months, we have seen uncertainty, but they have held up. The global investors, we had our Asia Investment Conference also last week, and the sense we get from investors is, look, a couple of years back, global investors would think India is a good market long term, but it's too expensive. And then we saw a correction late last year, early this year, and I think despite the market coming back, I think they're much more, if I can use the word, reconciled with the elevated valuations than they were, say, a year or 2 years back. They still find valuations rich, but they're now, unlike a year or 2 years back, willing to take at stock or sector level bets. So that's a change which we have seen, and we have seen that in terms of the actual activity also. They have deployed capital in the last few months, selectively, but they have. And I think that will continue.
But isn't such a premium on the Indian market well-deserved, Gautam? Because the perceptions are that India remains resilient in the face of tariffs. We have potentially an emerging US-India trade deal, strong domestic growth prospects, plus inflation, as we discussed, remains well anchored. Does that underlying picture remain to work in favour of a Buy India strategy? And as I said, isn't that valuation justified, therefore?
So look, the risk-reward, keeping in mind that valuation and other parameters we discussed, is obviously not as attractive as it was 6 months back. But yes, we still are recommending our investors that you should buy the dip. There's still a long-term attractive market, specifically given that even during the down cycle and early stage of growth, there remains room for earnings growth to pick up versus what we have been seeing. And again, at an early stage of the cycle, and I would call this a cycle, you won't see broad-based earnings growth where every sector delivers, but you'll start seeing pockets of growth picking up. Like we are already seeing early signs of stress from NPLs in the financial services easing a bit, not completely, but easing a bit.
Yes.
Not yet enough signs of trade growth picking up, but early appetite we're picking up from the market. So again, keeping that in mind, there will be enough appetite from investors to buy the dip.
Thank you for that, Gautam. And could you elaborate, perhaps, and give us a bit more colour on the challenges, on the speed bumps, what could go wrong with such a constructive backdrop? Because there are perceptions that reform momentum has slowed. Private sector capex isn't really coming to the party at this stage. There are mixed signals over trade deals, a flare-up of the India-Pakistan conflict. We saw that. Yes, it has settled somewhat. And then, of course, there are the structural issues like youth unemployment. Is any of that derailing, in your opinion, or going to derail such a constructive view on India?
So a lot of these issues have been around 5 years back also, or even 10 years back, or 3 years back, and now. So can any of these derail structurally growth? I think unlikely. Can it have some marginal impact on growth rates? Possibly. And we have seen that, like economists used to speak about India's potential growth of 7.5%. Now they're talking about 6.5%. But 6.5% is still an attractive absolute and relative growth rate. I think what derails or what is a risk to Indian economy and markets is more the global macro. If there's a global slowdown because of tariffs, etc., that will hurt India. So that's a risk. The entire trade deals, etc., the way we look at it, the risk reward is actually positive. The downside from that is fairly limited. Upside difficult to quantify, but there remains potential upside if India gets its trade deal strategy right.
Fantastic, Gautam. And you preempted my next question. Let's get into that. If both India and the US, and you heard how optimistic Howard Lutnick seemed to be, if they are closing in on a multi-phase agreement, then could there be a deal as early as July, maybe even when that 90-day pause period runs out? Or is a deal by Diwali, mid to late October, a more realistic time frame?
Tough to say. Typically, these trade deals are negotiated over years rather than months. But there's been enough positive noise coming from both sides that an early deal is feasible. So India has been more talking about later in the year, while the US has been talking about June, July. So tough to say. I think it's quite possible we have some kind of an early deal to take care of the looming tariff deadlines. And then there could be some more details coming out later on.
Judging by President Trump's most recent remarks, and then, of course, this to and fro within the WTO that India has decided to initiate, it doesn't seem that, as I said, there are some mixed signals. And from the US standpoint, it seems that President Trump is not keen on Apple relocating more production and manufacturing towards India and away from China. How does that complicate matters, especially when the expectation is once these trade deals are concluded, it ought to supercharge FDI commitments? Should we be managing our expectations in that regard then, Gautam?
Yes and no. Like I don't think anyone is baking in terms of their economic growth of a big supply chain shift into India or Apple shifting half its production to India. No one is baking that in, because that impact on economic growth would mean much higher forecast than what is out there. So versus what's baked in or expected, I don't think anyone is baking in a big supply chain shift. But just keep in mind, from a supply chain shift opportunity perspective, even a small supply chain shift can be meaningful for Indian growth and Indian economy. Not looking at, okay, if China is manufacturing 100, a large part shifts here. Even a small shift here can be meaningful. And for a lot of these supply chain shifts, it's also about the local market opportunity, not just shifting here to export. So I think some supply chain shift is quite likely, but a big one or not, the jury's out.
Gautam, a final question. The bigger issue is, where is India in terms of this march towards building advanced manufacturing and moving up the value chain? IT Minister is targeting the first domestically produced semiconductor chip by December 2025. Where is India in those ambitions? Is there enough momentum, and do timeframes like that seem realistic in your opinion, or perhaps a little bit too ambitious?
So look, it's a mixed bag. India has had advanced manufacturing capability in sectors like, for example, space. In semis, India has always been a strong player in terms of design. A lot of the design engineers globally are based in India. The advanced manufacturing in semis, I think semis we have seen globally how it's a big capex game and a scale game. So this is an early start. It's very difficult at this stage to make a call. Can India become an advanced semiconductor manufacturer? As an Indian, I would hope so, but very, very early days. But I'll also add a simple comment. If 3 years, 5 years back, you'd asked me, will India be able to deliver or manufacture these semiconductors this year, next year? I wouldn't have been so bullish. So it's a good start, but the jury's out again on the advanced manufacturing part. But there are pockets of success clearly, like space is a good example.
And especially developments on a state-by-state level. We've been hearing a lot about how visionary state governments like in Tamil Nadu are building out the ecosystem. So that's another reason to be optimistic. Gautam, we're going to leave it there, sir. Thank you very much indeed for joining me. Great conversation. Gautam Chacharya there from UBS. Coming up in the programme, it's a huge day for entertainment. The launch of the Nintendo Switch 2 console in select markets. We'll be live in Tokyo when we return. Welcome back. It's a big day for Nintendo with the launch of a new console generation, the Nintendo Switch 2. Global rollout will be staggered, but hundreds of thousands of fans in Japan will be hoping to get their hands on one. CNBC's Kaori Enjoji is one of the lucky ones and joins us now.
Thank you very much, Sri. I shouldn't take all of the credit because here you are. The Switch 2 that everyone has been waiting for. You had to pre-order this, win the lottery for it, get in line and buy it at 10 a.m. this morning. all of that was done by my amazing cameraman, Futa Nagao. I am just taking credit up for this and holding it up. Look, I feel like today I saw markets in action, market dynamism in action, because as you know, we do this every day on CNBC. Price is where supply meets demand. So this is the slightly cheaper version, the eShop version, which is going for just shy of 50,000 yen in Tokyo. It comes with these nifty controllers that are magnetically attached to the device, and you can put it on these consoles if you want to play by yourself. And since Futa is a diehard gamer, he forked out another $100 roughly for this, which is the Pro console, so you can do even niftier things with this. And this is also the caveat, because this is show and tell, the micro SD Express card with Mario on it. This basically doubles the memory on this by 256 giga. And apparently this looks very innocuous, but once these game consoles start to hit the market in en masse, these are going to be very coveted as well. And why we're talking about this, yes, we're all interested in Nintendo, but it's because a third of these are made in Vietnam. And everything that's made in Vietnam that goes to the U.S. may have a huge tariff slapped on them after this so-called pause is over. So the question was, and Nintendo hasn't answered this, how much are they ramping up and stockpiling this for the U.S. consumer, and how much are they willing to stomach some of the difference in the tariffs once the dust settles on there? And I think the question a lot of the fans in the American market are considering, because they won't be able to get their hands on this quite yet, is what the markup from those tariffs are going to be in the United States. And I think this is really market dynamism, you might say at its best or at its worst. But they're saying you can play the old games on them. I don't know if you're much of a gamer. I'm really not, to be honest. But he also bought the Mario Kart game as well, the Kart, which is apparently one of the coveted. You need a console, you need new games to play on them, right? That's the whole point. So that goes on sale today as well. He's got that as well. You have to download it. So I think I have one of the most coveted pieces of hardware in Tokyo right now. Sri.
I'm sure you do. I'm not much of a gamer, but when I do go to my son's friend's house, then I've known to have a little bit of a dabble on Super Mario Kart. It's very cute and fun. As an expression of soft power, it's very important, isn't it? I remember the late Shinzo Abe popping down a tunnel as Mario and then emerging on the other side as Luigi. Do you think that the Switch 2 can emulate the success of its predecessor? What does it do about projecting Japan's soft power in this environment?
I mean, it's an iconic name, right? Mario is an iconic name. Nintendo is an iconic name. It's been 8 years, so it's been long overdue. I mean, people call this an upgrade, but people are also saying that, maybe 8 years is too long to wait to call it an upgrade. I think soft power has its limits right now. I mean, we know that. And I think some of the technological prowess that Japan enjoyed back when Shinzo Abe was in his heyday and popping out as Luigi has really changed because the dynamics have shifted as well. But having said that, this is a household name, and I think this is the kind of brand that carries well still in overseas markets. But you can be an amazing brand, but if you're getting slapped with a tariff of more than 40%, it's a tough business.
Carrie, what does it tell you about the economic health of the consumer when there's clearly ample and abundant demand to shell out in the region of $500 for a Switch 2, and yet there are some very real cost of living issues associated with the affordability of rice? What's going on there?
Let me answer that in two phases. Look, there's I'm just going to call it what it is. It's a black market for Nintendo products like this, because yesterday when I went online, there were retailers that were selling this, even though they didn't have their hands on it, at about more than double the price on the internet. And the Nintendo has been trying to clamp down on that because, even if you have the ticket that you won the lottery to buy this, you have to show your ID, and they made it very hard. But the resale value is really what has people talking. So I think that part of the economy, so to speak, I think is a little bit different from reality. But But you raise a good point. I mean, if people are willing to pay, let's say, $450 for a game console, why are they lining up to buy this, which is rice? And this rice is very special. I kind of had to, it was hard getting my hands on this because this, as it says, is government stockpiled rice. And what's happening over the last week is the government has decided to release these stockpiles to retailers directly to try and get the price down. Now, I think the difference in that is that this is a luxury. This is a staple. And people are not willing to pay double the price of rice that they were, the same rice that they were 12 months ago. So they've decided to release the stockpile, but this is really old rice. It's 3 years old. Under normal circumstances, my first reaction would be you. But people are lining up for this, and I think that raises the question of mismanagement by the Japanese government, because stockpiling started in '95. You're not technically supposed to release them unless it's an emergency. It definitely hasn't been any natural disaster, but they were very slow to address this, and the reason why they're getting on board right now is because there's an election coming up in July, and rice is always a sensitive matter. But I think at the end of the day, labor costs are going up in Japan. Global warming is a reality. To get this to the consumer goes through a lot of retail chains in Japan. I think this is the key point that people miss. I buy this at the supermarket. Of course, the retailer's adding on a little bit of price to get a profit. But even before that, when the farmer grows this, Japan Agricultural Cooperative, this is basically the farm vote in Japan. It's akin to the National Rifle Association for the Republican Party. So they, before harvest, go to the farmers and say, look, we're willing to pay this much if you'll give us this. So they tack on a little bit. They send it to the wholesaler. That also costs money. The wholesaler then moves it to the retailer. That also costs money. And finally, the retailer gives it to the stores, and then I have to pay it for it. So I think that kind of dynamic is unique to Japan and probably something that needs to be addressed in the long term, because this is a short-term fix.
Also unique and critical to India and the conversation on US-India trade deals. Agriculture potentially is going to be a major stumbling block in that, as I'm sure it is in Japan. Carrie, thank you very much indeed. Great coverage. Now, as we head into a break, let's take a look at the forex space in early Asian trade. This is the picture. We'll be right back in 2 minutes. Welcome back. You're watching Inside India. Some of the stories that we are keeping tabs on. At least 11 people have died and dozens more injured in a crowd surge outside a cricket stadium in Bengaluru. Fans gathered to celebrate the Royal Challengers' first Indian Premier League title, but chaos broke out as people tried to force their way in without passes. Officials called it a tragic turn on what was meant to be a night of celebration. US President Donald Trump says Russian President Vladimir Putin is vowing retaliation after a major Ukrainian drone strike on Russian air bases. The two leaders spoke for over an hour on a call discussing the stalled peace talks as well as Iran's nuclear program. Despite previously vowing to end the conflict on the first day of his presidency, Trump now says an agreement on a ceasefire is still some way away. First it was Harvard, now Columbia University is under fire from the US government. Officials say it failed to protect Jewish students during campus protests, a violation. That means Columbia did not meet federal accreditation standards, and its status as a provider of student loans could now be under threat. The university says it's working with the government to address those concerns. Right, we are counting down to the market open in India, and this is how we are shaping up. Let's give you futures as a guide. Once again, we're about 15 minutes away from the open of the benchmarks. 24,727 is how futures are teeing us up for the benchmark. So if that does materialize, we're looking at upside of about 100 points or so. Dollar-rupee exchange rate, 85.91 is where we are standing. Let's bring in AI and talk about AI developments in India and the global race to establish national champions within AI. One way to make it more accessible is to offer large language models in local dialects, which is exactly what Saravam AI is doing. Part of the government's India AI mission, Saravam M is offering LLM services across the Indic languages. Saravam AI has raised more than $53 million in funding over 2 rounds from Lightspeed venture partners, Peak 15 and Khalsa Ventures. Let's bring in Pratyush Kumar now, co-founder of Saravam AI. He joins me now on Inside India. Welcome, Pratyush. First of all, for the broader audience, can you explain what sovereign AI exactly is and how it plays a role in driving India's economic development and India's deep tech ambitions?
Hi, thanks for having me. Sovereign AI, the way I look at it is an attempt to have strategic autonomy in building what is probably the most important technology of today's times, right? We talk about nuclear, we talked about space, we talk about quantum. Many people would count AI very much in that list of the key strategic technologies to be working on. While India as a country has never decoupled from the rest of the world, but there is value in having strategic autonomy in building this technology out. And by that, what we mean is having teams in India being able to build these LLMs from ground up. It also gives the ability for India to have the research and development capability as we mature in this technology. Though it feels like all these technologies are used so rapidly, notice that it's just a few years into what is a very long episode of technological innovation, and there needs to be capacity in the country to do it. So both the research and development capacity and the ability to build use cases that matter for India. India has led in what is called digital public infrastructure. You must have heard about Aadhaar, of UPI, GST. These are great standards that India could champion, and they are world leading. And we are very confident at Sarvam, and broadly the mood in the country is we can also take a similar approach at AI, build it for public good at massive scale, and then have the ability to build use cases that would matter for the 4th largest economy, the 1.5 billion people that are Indians.
Another way of looking at it, Pratyush, is that Saravam is addressing a gap in the market, a massive gap in the market in India, and that is associated with the lack of Indic large language models.
Yes, it's interesting how diverse India is from a linguistic perspective. Sometimes people don't recognize that within India we have 22 constitutionally recognized languages. Many of them have their own unique scripts. Though this is what is officially there is a lot of variation on the ground. The dialects vary from one region to another region within the same state. So yes, language is extremely rich and diverse. But secondly, also more importantly, the way language is used in India is very interesting. We often mix Indian languages with English. We sometimes even speak between Indian languages. Voice is very, very big in India. People use WhatsApp a lot, and WhatsApp voice notes, the highest density is in India. So language usage, which is, of course, a cultural phenomenon, needs to be intersected with what people are doing. And therefore, there is value in building in India and for India that actually maps these LLMs for the language necessities of the country. And I must also mention here that when you talk about India 2 and India 3, when you go to tier 2, tier 3 towns, their needs of Gen AI as we march towards, as a humanity, towards AGI, may be very different and needs to be looked locally and solved for.
Interesting, Pratyush. So let's move on to how Saravam M, which is your generative AI language model, is addressing those challenges and opportunities. It was released this month, I believe, 24 billion parameter, trained to reason across 10 Indian languages while tackling maths and coding tasks. So is this a foundational model, and how far will this take the sovereign AI ambitions under the government's India AI mission?
So in India, we have this India AI mission that you've already referenced. And as part of that, Saravam AI has been tasked to build sovereign models from scratch. That effort is yet to begin. Just for clarification, Saravam M was an internal effort at Saravam. And the intention was to show that we could do what is called alignment of the models, to align them for both Indian language skills and reasoning, coding, and math skills. In fact, we compare the model with many other models of its size, whether it is the Gemma models from Google, whether it is the Llama models from Meta, and we showed that across Indian language skills and the ability to do reasoning and coding, there is a large gap that we were able to create. And in fact, we've been very open about it. The model is available as open weights on Hugging Face, seen a lot of downloads, been trending in the front page, but also written a very extensive technical blog allowing others to use the similar scientific techniques to build models as well. Yes. We feel that it can address many challenges that we're looking at, whether it is content accessibility, whether it is the dialects aspect, whether it is a model that is biased towards Indian points of view. So that is how we expect people to look at it.
Interesting. Pratyush, Saravam M has generated a mixed response, though. It's been acclaimed and it's been criticised. So let's address this issue, if we could, of originality. Some say instead of building a true model, what you've done is simply fine-tuned an existing one. What's new here?
That is right. As I said, the sovereign model build-out is yet to begin. We have been assigned that particular contract. But as we ready ourselves for it, we want to be able to have the recipe, as it is called, for post-training. It's a very important part of the process. In fact, we've been very transparent about what it is. We build on top of the Mistral model, which is the company out of France. And then we show how to take that model and improve its Indian language skills while also improving generic reasoning and coding skills using a combination of algorithmic advances. In fact, we've also shown how to make it very fast and very efficient. We also released, in fact, the model was released 2 weeks back, and we released an update last week, where with additional what is called grounding, we are able to make the model more factual than even an OpenAI O3 model, which is much more expensive. So our intent has been to do it in open, and there's absolutely full transparency that this is here the post-training recipe. And when we do the sovereign model, we will train from scratch. But the ability to push Indian language skills while ensuring that coding. In fact, one interesting tidbit is JEE is the entrance exam, which is very famous in India. And this year's math Hindi exam, the model was able to do all 7 out of 7 questions, right? So we have actually, even the intersectionality of language and reasoning and math is something we have focused a lot on. And I think that the improvements are quite significant. And we've gotten very good response on the technical content that we have created.
Interesting. And can you give us a bit more colour, Pratyush, in terms of the response from a downloads standpoint of Sarvam M, and what's that telling you about adoption? You touched on education, one vertical, and real-world demand. Just provide us, if you can, some India-specific use cases.
Yes, so I think there were, as is usual in social media, there was some discussion in the very early 12, 13 hours after the model was released. But actually, the model has trended in the homepage of Hugging Face, which is the primary place where people go to look for open models for quite a while now. It has over 200,000 downloads. I think the use cases that we are seeing, there is one developer who has built a nurse chatbot. There's another developer who has built a mechanism to translate websites. There's another developer who has built a coding assistant in Hindi. So I think the ability for us to look at Indian languages in conjunction with code, math, reasoning, knowledge base, in fact, web search, we are going to release more features with respect to web search and deep research. I think doing that together leads to many, many opportunities. In fact, one opportunity that I would like to mention is we are able to put, because the model is small and very efficient, a lot of work has been done to optimize. It's usable in real-time calls. And in fact, we just recently reached out to over 40 million Indians, 4 crore Indians, through a platform that we have built in a matter of 10 days by calling and WhatsApp. And that is the scale that India provides for generative AI. There is an enormous user base which is digitally ready, which has connectivity with also 4G. And is in need for better digital services. So I think India is going to be a huge market for generative AI, and we are building the models for.
And Pratish, how confident are you that you can ultimately make AI models and the applications affordable and accessible, especially for those communities in rural India?
Yes. My perspective is that this technology is going to be very, very affordable. I think the economics of it is probably not very well understood. Even if I were to give a student, let us say in primary education in India, a chat bot to use throughout the day, it will probably incur a few rupees of compute. Right? Maybe at the most about tens of rupees. So when I think about what we give to citizens, whether commercially or through public sector engagement, I think generative AI is going to rank very high in terms of return on investment or just value creation for the citizen. So I'm very bullish that whether it is education, whether it is healthcare, whether it is financial services, these things will be available close to free and very affordable throughout the sectors. What is more important is that they are built for the people that they need to address. Accessibility is more important. I think affordability is already there and will get much, much better as compute and models become more efficient.
Thank you for that, Pratish. If the longer-term goal is to reduce India's reliance on foreign-made language models, then how soon could India reach that point, that inflection point of AI independence? And when could we see a truly Indian AI model?
No, firstly, I don't profess independence. I think consumers should have all the options that they need, right? I don't think India postures to become protectionist about this. We should have alternatives in India, and they should fight it out in the market. We are building models. As soon as we get the compute as part of the India mission, we'll get on to work. And we are hoping to release our models this very calendar year, which are built from scratch on data sets and methods that we create. So that will continue. I think it's going to be a combination of the ability to build these foundation models and also show unique use cases that really matter for almost 1.5 billion people. So we're going to focus on both those. We are a model building company, but we are also building the applications that people would eventually use.
Looking beyond India, Pratyush, when you look at the broader narrative globally, do you feel China is going to perhaps eclipse India in the AI race? And do the developments surrounding DeepSeek serve to underline how India perhaps is behind the curve? Or are you confident that India is at an inflection point in achieving a breakthrough of its own?
No, definitely the efforts in China are ahead in terms of the number of organizations building and the amount of investment they've already put into it. And it's on the back of China building consumer grade large companies in house over the last decade. So it's in some sense momentum that's been continuing. I think India would probably take a different and a middle path to it. We have not had, as I said, never wanted to become to profess independence or complete decoupling. That will slow things down, but it'll happen. I think we have the talent, we have the investment, we have the intent, we have the pride to do it. So I think India would do it. And what would probably you will see different in India is the ability to bring this to population scale in a manner that is a utility for every citizen. I'm deeply inspired by the ability to make this accessible to everybody. They should have every other model available as well, and the models that we have in India. Notice also that there will be strategic use cases of these models, and there is need to be able to build these models, refine them, given the complex geopolitical world that we are in for those strategic use cases.
Pratish, Saratharm is one of the most well-capitalized deep tech startups in the country. But Rome wasn't built in a day. Does such breakthroughs that you're aiming for, if they take time, do they mean more capital and more improvements? And where are you in terms of the funding journey?
Absolutely. This is an area that needs capital because you need both the compute infrastructure to train these large models and also talent. I think the government is on the right path in providing some of that capital in this particular year. We will continue to need capital, and we will raise them as we need it. We are also, however, very interested to do this affordably, right? What would have taken hundreds of billions of dollars a few years back now is possible far more frugally. And we are going to be mindful of that. And we're also going to be mindful of creating value positive experiences for consumers, especially working with enterprises in India. So we will of course look to raise more funds, but also do this far more frugally.
Pratish, we look forward to the next chapter in Saratharm's development. Thank you very much indeed for joining me on Inside India. Pratish Kumar there from Saratharm AI. Now, markets in Mumbai have been trading for a couple of minutes. We'll bring you the early movers when we return into
Welcome back. You're at the home stretch of Inside India, and we are going to talk about some inflation data coming from Southeast Asia, particularly from the Philippines, with May inflation data showing more signs of deflationary trends in the archipelagic nation. For the second straight month in a row, we've seen inflation below the policy range of the target range of the Bangko Sentral, or the Central Bank of the Philippines, at about 1.3% on a year-on-year basis, again pointing at signs that perhaps there's economic softening because of softening demand from the Philippine economy. Now, in terms of core CPI, we did see it come in a little bit higher than what is expected at 2.2% actually. But one of the biggest trends as to why inflation has also eased in the Philippines quite significantly over the last 2 months really is falling food prices. In fact, we've seen food inflation in the Philippines come in just 0.7% higher on a year-on-year basis. And that's also on the back of higher food production, higher food sources for the Philippines. One of the biggest drivers of inflation for the Philippines naturally also happens to be rice prices. And it seems that the Philippines, which imports most of its rice from Vietnam, is looking to diversify its sources of rice, actually. In fact, they're also talking to producers in Thailand, Cambodia, and even India, which is the biggest exporter of rice in the entire world, as possible future sources to try to diversify and make sure they can mitigate any possible concentration and supply shocks from importing too much of the rice from one country, which specifically is Vietnam. Now, the Bangko Sentral, or the Philippine Central Bank, has said that these are encouraging signs and that the recent inflationary trends, or lack thereof, gives them more policy now and more room to actually ease their monetary policy, which currently has their policy rate at 5.5%. This will also play an important part in not just providing economic stimulus for the Philippines, but also providing some support for the Philippine peso, actually, especially since it's strengthened significantly against the U.S. dollar in the last 6 months. Now, over in Japan, we're watching a 30-year bond auction later on today. Lin is keeping an eye on this for us. Lin, to walk us through what to expect.
Yeah, hey, JP. Well, that key auction has taken place now about 15 minutes ago, and we are seeing, again, signs of weak demand. So if you look at a couple of the metrics here, the bid-to-cover ratio for this 30-year auction coming in at 2.92, which is the lowest since December of 2023. If we look at another signal here, which is the auction tail, we saw it lengthening versus the previous month here, which is another sign that buyers are demanding higher yield and therefore lower prices as well. You take that all together in terms of the broader picture we've seen in recent weeks, the volatility in JGB yields, particularly at that ultra long end, and then the weakness we've also seen in recent auctions of the 20-year as well as the 40-year. Whereas, mind you, we saw that 10-year auction this year actually performing pretty solidly. And this really supports what many analysts are talking about, that whilst for Japan, certainly there are buyers that are very concerned about Japan's fiscal situation, but there is also a supply-demand imbalance here, particularly with life insurers sitting on the sidelines. So this result is likely to put more pressure now on authorities to act. And again, we are looking at these two key meetings. The first is the Bank of Japan's policy meeting, where we will get, of course, an update on whether or not there will be any movement on that benchmark rate. But also, at this meeting, the Bank of Japan is expected to lay out the plan in terms of its bond tapering program, or QT, from April next year onwards, with reports now saying that there are members within the board that is considering a milder taper in order to ensure stability of Japan's bond market. We're also looking at another meeting a couple of days later as well, set at an unusual time. This is the primary dealers meeting as well. Already there have been questionnaires released to many of these dealers for the Ministry of Finance to get a gauge of where the demand interest is going forward. And particularly now, in light of this result, as well as the others that I was highlighting, there is perhaps a higher chance now that we could get a tweaking of the issuance by the MOF, coming up with some analysts saying as early as July. Sri.
Lynn, excellent. And getting the fiscal house in order and keeping the fiscal house in order has been a big focus priority for the Indian government. Thank you for that, Lynn. Indian markets have been trading for about 10 minutes. The Nifty 50, the benchmark, is looking like this, looking somewhat sharper, 24,665. Rupee exchange rate, dollar rupee, 85.9150. Let's take a look at some of the movers in the Indian markets today. This is what shares of Yes Bank are doing. This is after Carlyle Group-owned CA Basque Investments offloaded a 2.62% stake in the Indian private lender, reducing its total stake to 4.22%. The stake sale ends the Carlyle affiliate's right to nominate a director on the bank's board. Remember, Yes Bank yesterday said that its board has approved the raising of 160 billion rupees through a mix of equity and debt to fund business growth. The stock down by 0.4%. Let's give you shares of Adani Enterprises after its airport unit, Adani Airport Holdings, secured $750 million in financing from a consortium of banks, including First Abu Dhabi Bank, Barclays and Standard Chartered. The company said that part of the funds would be used to refinance existing debt, while the rest would be invested to upgrade and expand capacity at 6 airports. The stock up by, let's call it flat at 2,491. That's all the time that we have today on Inside India. Do keep watching CNBC. I'll be standing in for Dan Murphy on Access Middle East, which is coming up next.